Welcome everyone once again to another live session today. I'm so happy, so excited to have you here with me today as we go through this session, as we go through this live session today. So I urge you to stick with me to the end. Believe you'll find great value as we go through this. Once again, thank you for joining me on this live session. Okay, without much ado, we'll start right away. If you can hear me loud and clear, please let me know in the chat. You can put it in the chat so that I can be aware of it, if the sound is okay. If the sound is okay, the picture quality is okay, let me know in the chats, please. Alright, let's crack on. Let's crack on. Okay. Alright, I believe you can all hear me loud and clear, so let's go straight in. What I'm going to do first is I'll go through what I do as I get onto the charts, or how I trade the charts, if I should put it simply. How I trade the charts, as I've received some requests to explain it or to make it clear. So that's what I'm going to do for the stats, and then we'll get back onto the charts, the actual charts, and then we'll crack on from there. So now I'm going to do some illustration of how to use the strategy that I use. Then from there, we'll get back into the charts. So let's say we have an uptrending market. We have an uptrending market where, let's use this one. So we have an uptrending market making higher highs, higher lows, higher high, higher lows. So this is an illustration candles that I'm using here. Okay, so this is a typical uptrending markets where you can see price is making higher highs. So from this point to this point, it made a high, made a retracement, made a higher low. A high again, and then higher low, high again, and then higher low. So this is a typical characteristics of an uptrend. So it got to this point where price made this higher high here, came to this point, made a higher low, push up again, traded to this equal high, creating what is normally referred to as a double top or M. So from this point on, we had a shift, or what is known as a change of character. So we had price trading below the previous higher low. So now we have a shift or change of character. So price now traded below this previous low here, causing a change of character. Causing a change of character. So once we identify this on the charts, the next thing we look out for is we look out for a retracement. Once we identify a change of character, we look for a retracement back to the origin. So the origin here will be the guy who started this whole move that caused the change of character. So let's try to, so this is the last candle before this downward move that caused the change of character. So we now take the high and the low of that candle, we extend it to the right. So that now becomes our area of interest. So we'll mark there as a supply area. So that becomes our area of interest. So let's say perhaps there is also an area where we identify on the chart as an imbalance area. We can also mark that as well. So let's say we have a small imbalance here attached to this supply area. So we mark that as well. So this now becomes our target area. This now becomes our target area, or our area of interest. First of all, we had a change of character. So once we had a change of character, this is the origin. So from this origin, we cause this change of character. We expect price to make a retracement back to this area of interest, then sell off. So all we look out to do in this particular strategy is we wait for price to tap either to the fair value gap area or tap into the supply zone. Then we look for a sell setup. So what we are looking for there is, when we say sell setup, we're looking to identify a particular thing. If we don't see that, we are not getting into the trade. So what we are looking for is either an engulfing candle at this area. Let me mark it. An engulfing candle right here. We look for an engulfing candle in this area of interest, or a topping tail bar from this area of interest. So engulfing candle basically is, we have a one candle here that is let me change the color, that will make it better for better understanding. So once I'm done with this, we'll quickly go back into the chart and then find some potential setups for the week. Okay, let me change this to okay, so let's say we have, I'm sure we know what an engulfing candle is, but I just want to illustrate it here. So we have this candle here representing a bullish candle, because we had a change of character here, so we're expecting a bearish engulfing candle. So let's go back to the red color. Alright, so now we have another candle coming back to fully take out the previous candle. So this is the event that we look for in this area of interest. So when we spot something like this in this area of interest, we go into the trade. So this is our entry. Let me put this. So either this one, let me put another event that we can. So another event could be a topping tail bar that we can identify in this area of interest. So either one of these events, or we could, sometimes you can have both of them occurring at the same place, which makes it even better. So now what we look out for here is this event, then we take the trade. So once we identify them, it's in our trading plan. So once we identify these events at this area, all we do is we take our entry from here to the next low, or the next previous low. So your stop loss goes right above these highs. So what next you should make sure is that you are playing within your maximum loss per trade. So if, for instance, your entry here is 1 lot at this level, and then let's say your maximum loss per trade is £50, and your lot size you have chosen is 1 lot, all you have to make sure is from here to this stop loss level is £50 or below £50. If perhaps it's more than £50, then you have to reduce your lot size to maybe 0.8 or 0.7, 0.5, just to be within that maximum loss per trade, which is £50 that you have set for your account size. I'm using that as an illustration. So all you have to do is to make sure you are playing within your maximum loss per trade. So once you put in your order here or your entry here, your target is the previous low or further down. If you anticipated price going further down, that will be your target. So basically that is the how I trade the market. I also have moving average, the 20. I use the 20 moving average with the charts as I trade. So for instance, if I want to if I enter a trade from here, and after entering I want to add on to the trade, as price move away from the 20 moving average, I'll draw a line just to illustrate that as well. So let's say blue. So let's say this, so price going up, that's the 20 moving average I'm drawing. So perhaps price falls below the 20 moving average. This is too wide away. Let's try again. Okay, so let's say this is a 20 going up, and falls below like that. So how I use the 20 is it's mainly my trend guide as well. The price is above the 20 moving average, I look to buy. If it's below, I look to sell. So over here, if I redraw this again, I think it will be much better. Okay, let's move. Alright, so after entering here, anytime price comes back near the 20, like we start here, we have a retracement to the 20, like that. I've put another chart on it, just to make it clear. Okay, I think for clarity purposes, let me remove all this and then redraw it again for the purpose of clarity. Where are we? Okay, so we have an uptrend going high, making higher highs, higher lows. So this is how price normally moves. So makes a high, it pulls back. So from this point on, this is how I was trying to explain to you. Once I make this first entry here, and perhaps I want to add up to my entry, as price pulls back to the 20 moving average, and it gives me one of these events where the blue candle or the green candle, whichever color you might have on your chart, is taken out by the red candle or purple candle as I use on my chart, then I put another entry here, provided price is near or at the 20. If it's wide apart, I'm not adding. If it's wide apart or away from the 20 moving average, I'm not adding. So that is the color change play. Where price gets to or retrace to the 20 moving average. Then if I see a color change, that is where I add to my entry. So I take my trade from this area of interest and then below, and then also targets there for my take profit. So let's say this is my target zone. So all that I will do is mark that area as well as my area of interest. So this now becomes my demand area, where I take the trade from here and then I target this area to get out. So anytime you getting into a trade, you must know where you're getting in, where your stop loss will be placed, and then where you'll be taking your profits. So as I change, this will now be the change of character. So after the change of character, every time there is a break below, it becomes a break of structure. So now we have this break here, we have break here, that will become break of structure. We have another one here, another one here. So another break of structure. So in an upward move, or in an upward direction, uptrend, so if there is going to be a change of direction, the first thing we will identify is a change of character. After the change of character, we now will be having break of structure as it change and direct itself to the other opposite direction. So the same way, if for instance we were in, before this upward move started, we were in a downward trend, once price turns round and begins to break the previous high point, that will become the change of character. So after that, each of this break now becomes break of structure, where all you have to do is identify the origin of this break. So this break of structure here, this break of structure here, the origin now becomes here. So this last candle now becomes the origin. This last candle now becomes the origin where this break of structure originated from. We have another one here. We have another one, another break of structure here, another break of structure here. So the origin now is from here. So you also mark your origin. You also mark your origin. So once you mark the origin, you also try to identify if there's any fair value gap attached or near the origin. You mark it as well, because sometimes price just tap into the fair value gap and then turns round. So if you're able to identify all these areas of interest, it helps to target where you are actually taking your trade from, and then where you are taking your trade to. Yeah, so that is how. So this is how I basically look at the charts, reading it and then trading it every day. This is the process. This is the process. So if I don't see what I'm looking for, I'm not entering. If I don't see what I'm looking for, I'm not entering. Okay, so now I believe this throws more light into what I do on the chart, or how I trade the chart. So without much ado, let's go straight into the actual charts. So this example is for this entry here where I took is for a downward trend. So in the same way, if you have an upward trend, it will look something like this. Let me change the moving average. So if you have an upward trend, this is how it's also going to look like. It's just an inverted form of it. So the same thing is the same thing. All you look out for is at your area of interest, you are looking for this to play out. This is what you are looking out for: a break of the high and then a retest, then you take the trade from there. So once you have this break, you have this change of character here where price trades above this previous high. That's a change of character. That's a change of character. So once you spot this, you identify the origin which will be somewhere here, the last candle before the move that broke this previous high. So you identify and then you target this area for your entry, just as we did it on here on the upward one uptrend. So I've just turned it around to illustrate to you an uptrend situation where you have to also identify a similar thing to take a trade. So if you don't have this scenario, you stay away. It's not, you don't have to be taking any trade every time, every move. You have to plan your trade and then you take your trade from there. It's not advisable to just be entering trades when you see a green candle or you see a red candle moving. You have to plan your trade and target a specific area. And once you target that specific area, you have to wait for an entry setup where you have either a topping tail bar or bottoming tail bar or an engulfing candle that takes out the previous candle. So a good analogy is this one. Let me just do a quick analysis on this one as well. So if we look at the markets, or we look at the charts like this, where we have let's say a downward moving candle, and then we have a, okay, let me use red so that to be, we have a downward moving candle here, and then this red candle gets taken out by this upward candle, this blue candle, which I'm using it as an uptrend candle or a bullish candle. So let's say you have the sun here giving light from this side or shining through here. So because this candle is that big, hovering, taking complete shadow over the bearish candle, the bearish candle has no energy to grow. Therefore, the blue candle or the bullish candle is the one receiving all the energy from the sun. Receiving all the energy from the sun. Therefore, it has got the power to move up furthermore. The blue candle, because it has completely overshadowed the red candle, has more energy to make the next move up. That is why we wait for an engulfing candle to appear. So once we have this scenario, we don't second guess, we don't check our pulse or see how we are feeling before we take the trade. We are following a specific process. So once you spot this, all you have to do to either wait for a gift play where price pulls back a little bit to this area. So once it pulls back, you can take the trade to the upside, or you can go into the trade on this particular candle the moment it takes the high of the previous candle. That is what is called the anticipation entry. So if you don't want the anticipation entry, you can go in after the candle, this candle closes, and then you go in for the confirmation entry. I believe this clears every doubt and then makes it clear for everyone to understand. So now let's go straight back into the actual chart. If you have any pair that you want me to have a look at it, you can put it in the chat, or if you have a question, you can write it in the chat for me to see. Thank you very much, and then we'll crack on from here. All right. Okay, so let's crack on. Let's go right into the chart and let's look at some charts for the week. Alright, so let's remove this. Okay, let's start from gold. Let me remove this, and then we can see what we can find on gold. Let's see what we can find on gold. Let's remove the drawings. Okay, so on the gold, as we can see on the weekly, it's been on an upward trend, but currently for the last week we had a bearish push down. So let's see on the daily charts. So currently we have price making a retracement back to the 20 moving average. After this push up, all this area happens to be in an area of consolidation. After it appears to be in an area of consolidation, let's say from here. So from this point on, we can kind of make this much easier, because you want to identify some areas of interest and take the trade from there. So with that said, this is the last candle that was given us. So this we can mark it and then try to see if we can refine the trades as we go on. So we're going to be refining this as we go down to the smaller time frames. So we had a break here. This move began from here, making higher highs on this area. So we had a break of structure here. So the break of structure, the origin, we can mark it to be from here, this last candle here, So this is on the daily. We'll take it as our area of demand. So this break of structure, this is the origin, just as we're doing it on the illustration. This is the actual chart. So let's look at it from this point on. So this now becomes our area of interest. Take this off for now. So this now becomes our area of interest. Then we're going to be refining it to get a better picture or a clearer picture. So as we can see on the daily time frame, there is no area of imbalance or fair value gap identified here. So we'll go down to the smaller time frame. So this is the daily area of interest or demand we marked. So we can further refine it by repositioning it. So as we can see, we had price making this move up here. So with this current break here, the move actually began here. So let me mark the area that we are talking about. So we have this break of structure here, this break of structure, before the break of structure. break of structure. Where is my tool? Okay. Break of structure. Views. Okay, so the origin is this candle, and then from this point on we can also see that price gapped up where it left this space here, where after that it traded back to fill it up. So what I'm saying is here we identify this origin where it's caused this break of structure, and currently that is where price has traded back into on gold. This is the 4-hour time frame. So from this point on, we can also identify this area, this last candle here, as our supply area of interest. Supply area of interest, and then there's also a fair value gap attached to it. So I'll mark that as well from here. So on the daily, we're not able to make, it wasn't that clear enough to mark this area. So on the 4-hour, it's giving us that option or that opportunity to identify some of these things that helps us in trading. So that's a small area of fair value gap. There's another area there. But more interesting, let me remove this. Let's that I put there. Yes, delete. I placed some alerts there last week to notify me once price get to that area. So now we have price trading into this area of interest. So what I was talking about earlier on is this candle here. We can clearly see how this bullish candle has completely overshadowed this previous bearish candle here. So now we are in an area where price has made a move up. As we know, gold's been in an upward move of trading upward trend. So we had this break of structure here. Price has traded back into this area of interest, and gave us this big bullish candle that has cleared all these last candles. So each one of these candles is for 4 hours. So let's see how many candles has cleared. About 1, 2, 3, 4. 4 candles. That tells me that this is really a powerful candle. This is a very powerful candle that has cleared all these candles that was printed in the past. And as we know, this is our area of interest. So this we have here, as the market is now closed. So as the market reopens, we'll have to analyze the situation. So this is a perfect example of what we're looking at. So in a situation like this, we normally look for a position right from here to the previous high. Stop loss going there. But that's again, because the market is closed, we will not put so much emphasis on this now. But we just having a scenario planning where we could possibly take advantage of it. So as the market opens, we'll wait and see how it plays out. If this bullish candle here will still hold its ground and push further up. So as we can see also from this point on, we can see price came to this narrow state using the 20 moving average and the 200 here. Went into this white state and then came back, fell below the 20 moving average, and then tapped into this area of interest. So currently, we kind of moving to this narrow state. So we'll still have to wait and see how this plays out as the market opens. But ideally, this is a perfect example of what we're looking at earlier on. And because the market is closed, we'll wait and see how it plays out later on. So we can further refine this to the smaller time frames and see how best we can approach this. So on here, price, the last candle now becomes this. So now on the 2-hour time frame, you can see that there was this fair value gap here, which got filled as price pushed back to tap into this area. So I will just identify this as we go along, trying to refine this. So that's a fair value gap, or imbalance as it may be called. Okay, so what you're saying is, as we broke this high, causing a break of structure, price traded to this high, to this area, our target would have been here if we were taking a counter trend trade. As we spotted this engulfing candle here, this would have been a nice opportunity. I think this is a trade. This is a trade we played out last week, which played out last week. Last week, the analysis we did, this is what we analyzed, and then we took this, and this played out right on Monday. When Monday, our profit target got hit on Monday, right on this. Yeah. So what I'm saying is, as price broke this structure, we anticipate, or we believe that it will come back to the narrow state. So if we look at the two-hour time frame, you can see that the price is already in the narrow state. It's on the 4-hour that it's a little bit wide apart, but on the 2-hour time frame, price is in the narrow state where it has even moved above the 20 moving average, having a 20 moving average holds currently. You can see how price is holding above the 20 moving average. That's one of the powerful things I also look out for. A 20 moving average holds, whilst price move above the 20 moving average, and you can see that the 20 moving average will be kind of holding it, and then from there we take off from that point on. So with this scenario, you can be looking out for a bullish candle right here as it goes through this hold session here. So yeah, so this is the refinement on the 2-hour. Let's go down to the 1-hour time frame. So on the 1-hour time frame, we can further refine this area to, this is the last candle we can spot here, so we can further refine it. Not this one. We can further refine this, our area of interest, to this last candle before that push to break the structure. So with the break of structure as well, we can also say we have this one here. So we had a push up here where price broke this structure. So this is the break of structure on the 4-hour time frame. So as you refine it, you can also take advantage of these. So we have this break of structure here with this our new area of demand that we've identified. Then with our area of imbalance, this is also our new area of imbalance. Our new area of imbalance that we refined to. So on the 1-hour, we can see how price tapped into the imbalance area, and with this push, big candle pushing up, it tells me how powerful the buyers are. If you look at the number of candles that it has cleared on the left hand side, that tells you a lot about the power of the buyers who came into the market. So we'll see as the market reopens from here. We'll see as the market reopens from here. So one thing I also like about this is it's giving us a second leg. So it's from the second leg that we have this big elephant candle up, this big candle pushing up. So normally this, if I'm taking a trade, I prefer to take it from the second leg. So this is the first leg pushed down. So this move down, this is the first leg, price retraced back to the 20 and then came back for a retest. So it's the second leg that I'm more interested in taking to the upside. So as the price traded above here, you're taking a trade on anticipation entry. The moment price closed above, let me change this color to make it clear. So the moment price traded above this last bearish candle, you could go in for anticipation entry. Your stop loss goes below here. Mind you, always playing within your maximum loss per trade. So if your entry from here and then your stop loss is here, you have to reduce your lot size. Perhaps if it is less or far too less, looking at your account balance, you can also add up just to play within your maximum loss per trade. If maybe one lot is less, it's less than what your maximum lot size is, maximum loss per trade is, you can increase your lot size to fit within your maximum loss per trade. Okay, so once we get an entry from here, we take the trade to this area where it got to the previous high. So this now becomes the target. So from here to that side, from here to that side, I believe this is clear. I believe this is clear. As I said, if you have any question, don't be shy. You can put it on the chat and we can look at it together. We can look at it together. Alright, let's crack on. So this is the 1 hour time frame. So if we want to further refine it, you can go to the 30 minutes and the 15 minutes time frame. So currently I've just jumped to the 30 minutes. Let me go to 30 minutes. 30 minutes time frame. So the 30-minute time frame, you can still see that the fair value gap area is still here, and so we still hold it at this level. So in all, that's how we can refine our trade to get our area of interest to target and take our trades from there. So on the 30 minutes and the 15 minutes, it hasn't fully tapped into the origin. As we can see here, we haven't fully tapped into it. So that's why I'm saying there's still potential. We can see that price is trading below the 200 moving average, and it's currently in between. So basically, we say in the downtrend. So we'll see how price reacts from this point on. We'll see how price reacts from this point on. So we could, because there are these areas of interest that's all pending, or liquidity areas that's all pending from the past movement. So this is a liquidity area that's all pending, or areas of interest as well. So we could expect price to make its way all the way to these levels here. It's too big. Yeah, so that's on gold. That's on gold. So let's see what week the markets will play out. So sometimes if the movement is not that clear to you, it's better to wait, to sit on your hands and then wait, because already we have all these pending areas we are anticipating. So we have an area here where price broke a structure or caused a change in character that is not been tapped in yet. So if I should mark this area, okay, so we had a tap in here. So this one we say it's been tapped in already, but it's now a liquidity area where it can attract price to. So this is a liquidity area now where price gets attracted to. So we can also look at this one here. This one, as we can see, hasn't been tapped in yet. So it's a pending area of demand that we can expect price to revisit. We can expect price to revisit. So we have this scenario, price in a downward move now on the 30 minutes, 15 minutes. So this is the 15 minutes as well. We currently had a change in character as price took out this high. So currently we have a change in character here. Let's mark out this, a change in character. So we have this change in character here, or change of character, because we are pushing down. Now price has broke above this previous high. So if we are going by this, this will be the origin. So these are all the scenarios that we can build to plan our trades. So currently on the smaller time frame, this is what we are seeing. So identify an area of imbalance as well. But whatever you identify on the smaller time frame, you have to bear in mind that the higher time frame carries more power than the smaller time frame. So you have to be aware of that. You have to be aware of that. This imbalance. Okay, so, but whatever be the case, for whatever movement it is, it always will begin from the smaller time frame. So this is what we have here at the moment. So, but we'll just wait and see, as I said again, see how the market plays out as the market reopens this evening. So that said, we have the option of price coming back here if there's truly a change of character. Have the option of price coming back here. So all we're looking out for is an entry event. So we mark these areas. Once we have an entry event in this zone, in this target area, then we take the trade. If we don't have an entry event there, we sit on our hands. You don't blindly enter the trade and say, oh, I've marked this area and the price has gotten to the area, so the moment price gets there, you take the trade. No, you have to wait for price to give you the entry event before you take the trade. Okay, so let's move on to another pair we can have a look at. Let's see. Okay, so we have almost finish our session. We've gone so almost about 10 minutes to the end of the session. Alright, okay, so we have on here the GBP card. As I said, if you have a symbol or a particular pair you want me to have a look at it, just feel free to put it in the chat and I'll have a look. But again, it's the same thing. You can do it on your own. As I go through it, the same way I go through it, you can do it. So on the weekly, on the GBP card, you can see price giving some rejections above here, coming back to the 20 moving average. So we can see that we were in, or we have been in an uptrend, making higher highs, and higher lows, higher high, higher lows, higher high. Okay, so we can see that somewhere here price has been in a sideways movement. It was in a sideways movement before it broke above this area, before it broke above here. So we had sideways movement above here. So price created equal highs, equal lows here, and then finally broke above here. Finally broke above, but this is a weekly time frame, so we just wanted to spot the current move. So currently we can see price having some rejection here, indicating a bullish movement. So this is the weekly time frame. So we go down to the smaller time frame, and then so we get to daily. So on the daily as well, this is what we have. We can see currently price is more or less moving sideways, moving sideways from this point on. Moving up furthermore, we had this here. So we had this big push up, this upward trend here. So we had the same thing that we're talking about here. We had a break of structure. Break of structure right here. Break of structure right here. So this happens to be the origin. Puts the origin from here onwards. This is the origin. This is the origin of the break, and then that's the origin of the break. So price pushed up to this level, came back to this low, and then pushed again. So this area is still pending to be tapped in. It's an area still pending to be tapped in. But if we can identify from here on, we can see that there's a volume imbalance here, but price did not quite get there to fill it. So we'll leave that one for now, and then maybe move to the smaller time frame. So we have this pending area here. So that's quite a far-reaching area. So we'll go to the current or recent places that we can have a look at. So we have So currently we have this area we are looking at. We had a break of change of character. That's a change of character right here on the daily time frame. Change of character. So looking at it from this point on, it's been an uptrend, even though we identified this area as moving sideways, but we're just focusing on this current area. You can see that it's been on an uptrend and price is being rejected from here. From this point on, we had a change of character, which is right here. And then from this change of character, this is the origin. The origin of this move that caused the change of character started from here. So that now becomes our area of interest. Our area of interest. Let's mark it as supply area. So let's see if we can identify any imbalance attached to it. It's a very tiny one that I can see. Very tiny imbalance. Sometimes it's very tiny, but still it's there, so you don't just overlook it. So I would say that's tiny one, but as we go on the smaller time frames, I think we'll be able to spot it. So on here we can also see a pending area from here to here. Pending area from there. So this will become demand. Yeah, so this is a pending area that's been tapped in. It's not a pending area, it's been tapped in. So we, from this point on, this is where this origin, that's price traded above here, causing this break of structure. Causing this break of structure. So after we had this break of structure, price got rejected from these levels and then came back to tap into the origin. And from this point on, it's kind of pushing up. As from looking at it from here, it's been on an uptrend, so it could move on from here to continue the upward movement. But looking at this from here, we can see that this is a break of structure. We come back to tap into the area of interest, and then as we see, this is a daily time frame, so we also have a low here that has been broken below, causing a change of character. So let's go down to the smaller time frame to further refine this area to make it much clearer. To further refine the area, so we're looking at the recent price action. So this was on the daily. So if we're refining this area of interest, let's see if it's the same area. So this is the last candle before the up push. So we refine this area to this, the high of that candle and the low. So we see how price came back to tap into this area, and then from this point on, it's making its way up. From this point on, it's making its way up from here. So if it's an area you identified on the charts, you could have tapped into this trade from here to this point. So this is a 4-hour time frame. This is a 4-hour time frame. So if we measure, if we take, say, this movement, this is a movement that took 2 days, 20 hours, approximately 196 pips. So if you take a trade from here, if you're able to mark your charts and then take a trade from here, your stop loss below here, targeting this previous high, or where price is now, you still would have caught this movement, this 196 pips. Right. Okay, so let me further refine this so that it will finish the session on this. Okay, so we said we'll focus currently on this area, this recent area. So we have a change of character here we identify on the daily. So let's see what we have here then. So price traded here, causing a change of a break of structure. Traded here, causing a break of structure. So the origin, so this whole area is also part of the move. So we refine this area to this, since it's the area that the move originated from. So we started from here. So the imbalance area, we can also refine it to here and here. So whenever we have a large area of imbalance like this, which also you can target the halfway or 50% of the area. So the 50% of the area is where the line is. Let me change this. Is where I have this line here. So you can see how price got rejected from this area several times, then pushed down. Price got rejected from this area. So I just all that I did was to mark this large area of liquidity void or imbalance. So over here, my target, if I mark an area, a big area like this, my target is halfway or 50%. That's exactly what price was doing, targeting the 50% and then got being rejected from there before it pushed further down. So let's see, we have another break of structure here. Another break of structure here. So the origin will fall within our, so the origin is within our fair value gap area, which gives it more confluence, so for it to be more powerful, even more powerful. So we have this 4-hour area of imbalance here, and then there's a break of structure here, which the origin is from here. So the origin is from here. There's also some imbalances attached to its imbalance attached to this area that we are referring to. Imbalance. Okay, so we can see how price traded down, came back and tapped into this area and gave a nice sell-off to the area the next area of interest that we identified earlier on the higher time frame. So this is the daily area of interest that we marked out earlier on. So if you mark your charts, this is the current area that we are looking at. We had a break of structure, so price traded down here, came back, tapped into the zone, and then boom, gave off this nice move down here. So from this point on, we had another, so this is another break of structure. So the same thing we do over and over again, identifying these areas and then look out for the origin. Break of structure. So the origin of this is this area. So you also try to identify if there's any imbalance here. So currently we are at this level here. This is also an area of imbalance that we identified with this move. So price is currently tapping into this area of imbalance, and it's looking like it's giving us a engulfing. So this is a 4-hour time frame. So you can further refine this to 2 hours. If we go down to 2 hours, we can further refine these areas and make it even much interesting. Alright, so from this break of structure here, we can further refine this area of demand to this here on the 2-hour time frame. On the 2-hour time frame here. So over here we can identify that we also have some imbalance here, which also falls within the area we marked on the 4-hour time frame. So confluencing. So we have this imbalance here where price just tapped into it and turned around. We have this engulfing candle right here, which gave us a beautiful gift play as it pulls back to give us a gift play to the downside. So this area happens to be a strong area, as we have different areas of imbalances falling on top of the previous ones. So that even makes it much interesting to look at those areas of interest with a very high probability areas as well. Okay, I believe it's much clearer. There's no confusion here. So we kind of refining these areas, and then what we have been identifying here is the same areas we identified on the higher time frame. We are kind of identifying these same areas on the smaller time frame, which makes it even much more powerful. So much more powerful area of interest. So let's go down to 1 hour. 1 hour. So on the 1 hour we have this break of structure here. Break of structure here. Break of structure here. The origin, it falls within the area of interest on the higher time frame we marked. So we would say it's the same area. So in the same area here we've been looking at before. So see how price. So if we just quickly mark here on top of what we are seeing here, so the origin of this break started from here. So we have this whole area to be the supply area on the 1 hour, which also falls within the imbalance area we identified before. So if you targeting this area, if you spot this and then you see this beautiful entry event given here, a doji candle with this bearish candle completely taking out the last of these candles, and then we had a gift play where price retraced to this high. Then from there on you can see how price smoothly move down, but at the moment market is closed, so there's a high probability that we will have some movement from here, as the move has already started. So for this one, I'll look to target here this coming week as the market open. So we'll see how it plays out. This is my take on this one. This is my take on this one. So take profit at this low and then stop loss here. So these are all we deal with high probability trades. So if this does not play out, we have our protection here to take us out of the market before it causes any bigger damage on the account. So the secret is, the longer you stay in this game, the higher your chances of making it. So if you don't protect your capital, you could be kicked out before you know it. So let's do all we can to protect ourselves in the market. Okay, all right. So basically, this is the analysis that we go through to the smaller time frames to take trades. So if you have any question, you can pop it in the chat. Other than that, we've already gone past the hour mark. So without much ado, I will say thank you very much for being with me today. Thank you very much for being with me today, and then I hope to see you next week. If you haven't subscribed yet, click on the subscribe button on the screen and then subscribe to the channel so that anytime I bring out a new video, you'll be notified. And also click on the notification button as I bring any video or have any live events. You'll be notified to take advantage of it. I believe you found value with this live session today, even though we had a limited time to further analyze other charts, but we did some quick lessons at the beginning in today's session. So I believe you found some value in today's session, as well as I said, and then keep on practicing and then keep on putting in the work. Keep on putting in the work and then follow your plan. Plan your trades and follow your plan. This is how we plan our trades, by identifying these areas of interest and then waiting for these entry setups, entry events before we get into the trade. We are not gambling here. We are not gambling here. So if you plan your trades and then you trade your plan, this is not gambling. You are waiting to see certain events to happen. If they don't happen, you are not getting into the trades. So thank you very much, and then hope to catch up with you next week, same time. See ya.